Okay, so how can just 500 bucks a month make you a millionaire? I know. It totally sounds like some crazy clickbait headline, right? But the math, well, the math is shockingly real. So today we're going to break down the super simple, powerful formula that can put you on the path of financial freedom and, help you dodge a lifetime of that awful money stress. All right, let's dive in.
You know that feeling, right? It's a feeling a lot of us know way too well. You're just sitting in your car, maybe in a parking lot, staring at your banking app. You're doing what some people call poverty math, just trying to figure out if you can afford the basics. And then you scroll through your phone and bam, there's your coworker who you know makes the same salary you do on what looks like her second vacation this month.
So what's going on here? I mean, how can two people with the exact same income live such completely different lives? Is one of them like drowning in secret credit card debt? Did they inherit a fortune? The answer, honestly, is usually way simpler, and frankly, a lot more frustrating. It almost always comes down to one tiny, kind of boring decision they made years and years ago. And this gets us to what you could call the two lives problem. It's that huge gap that opens up between people who start out at the exact same place but end up in these wildly different financial worlds.
So let's imagine two people for a second, Jessica and Amanda. They're both 28 years old, both making the same 65 grand a year. On the surface, things look pretty similar. But when you look just a little closer, Jessica's driving a reliable used car and has already put away $47,000. Amanda, on the other hand, is driving a brand new luxury car and is only about $3 grand invested. Right now, at this stage, that difference doesn't seem like a total disaster. But this is the exact moment their financial stories split apart.
Now let's hit the fast forward button and just see how this gap grows. By age 35, okay, it's pretty noticeable. By 45, whoa, it's a chasm. Jessica's sitting on over $500,000, while Amanda is really starting to feel the squeeze. And by the time they hit retirement age at 65, it's not even a contest. Jessica is a multimillionaire, totally ready to retire in style. Amanda? Well, Amanda's staring down the harsh reality of having to work deep into her 70s. Same salary, two completely different endings.
So what was Jessica's secret? Was it some complicated trading strategy, a lucky bet on some hot new stock? Nope. It was something way more powerful. And something anyone can do. It's the 500 formula.
Okay, this is the number that just breaks most people's brains. If you invest just 500 bucks every single month for 40 years into a simple S&P 500 index fund, that's just a basket of the 500 biggest US companies, and you get a historical average return of around 10%, you could end up with over $3 million. Now sure, inflation is a thing, so that money won't buy as much in 40 years, but it's still a life-changing amount of wealth. And that's it. That is the entire strategy. Simple, right?
Now, what's truly mind-blowing is where all that money actually comes from. Just look at this chart. Over those 40 years, you'd put in $240,000 of your own money. That's that tiny little slice you see there. But the other $2.9 million, that's 92% of your total wealth. That massive blue section, that's the market doing all the heavy lifting for you. That, my friends, is the magic of compounding. So right about now, I know what you're probably thinking. All the excuses, the yeah buts, and the what ifs start to creep in. So let's just tackle them head on, because these are the exact mental roadblocks that keep most people on the sidelines forever.
And this is always the number one objection. $500 is a lot of money. My budget is already stretched thin. And you know what? That is a totally fair point. But here's the uncomfortable truth. For a lot of us, the money is already there. We don't see where it's going.
If you look at the data, the average American spends about $273 a month on subscriptions, and a lot of those they probably forgot they even signed up for. And they spend another $280 a month eating out or getting food delivered. Just between those two things, that's over $550. The money isn't missing, it's just being spent on stuff that gives us a little buzz right now instead of building real long-term wealth.
So this is the key. It's so crucial. We have to completely reframe how we think about our spending. The real cost of something isn't the number on the price tag today. It's what that exact same money could have turned into if you'd invested it instead.
And this just lays out the stakes perfectly. That $280 restaurant budget, that's not just $280. Invested over 30 years, that's a $632,000 decision. And that average new car payment of almost $750, that isn't just a monthly bill, that's a $1.7 million choice. You could literally be trading future millionaire status for dinner out tonight and a car that's losing value the second you drive it off the lot. Okay, here's the other big fear that keeps people frozen. What if the market crashes? Well, let's just look at the history, at the data. The market has averaged a 10% return for almost a century, through depressions, world wars, you name it. In fact, there's never, ever been a 20-year period in its history where it had a negative return. And here's the real secret. For a long-term investor, crashes are actually your friend. They mean your automatic $500 investment is just buying up stocks while they're on a massive sale.
Yeah, to put it a little more bluntly, the stock market has survived actual wars and economic collapse. Do you really think that you putting $500 into it is the thing that's finally going to break capitalism? Yeah, probably not. The system is just way more resilient than our fear gives it credit for. Panicking is the single worst thing you can possibly do.
So if the math is this easy and the history is this clear, why don't more people do this? It's a great question, because the biggest obstacle isn't your bank account, and it's not the stock market. It's your own brain.
See, your brain is hardwired for immediate survival, not for planning your retirement in 40 years. It's a cognitive glitch called present bias. It makes the instant gratification of a new phone or a fancy dinner feel way more real and valuable than the abstract idea of being rich someday, even when the math is screaming at you that you're making a terrible trade.
And then there's this one, loss aversion. Psychologically, the pain of losing $100 feels more than twice as strong as the good feeling of gaining $100. This is what makes people obsessively check their accounts when the market is down, and then totally panic and sell everything at the absolute worst possible moment, locking in their losses for good.
Which brings us to this kind of wild but totally true idea you see here. Studies have shown that the investors who do the best over the long run are often the ones who literally forget they even have an investment account. The less you look, the less you're tempted to react to all the noise and the day-to-day drama of the market. And paradoxically, the richer you're likely to get. So, how do you fight your own brain and actually get this simple plan started? Well, the best news of all is that it takes less than half an hour to set yourself up for a lifetime of wealth.
All right, here it is. The whole plan in just 5 simple steps. You ready? First, you're going to open a retirement account like a Roth IRA at a big name place like Fidelity or Vanguard. These are great because they have tax advantages built for long-term growth. Step 2, link your bank account. Easy enough. Third, you buy just one thing, a single low-cost index fund that tracks the S&P 500. Don't overcomplicate it. Fourth, and this is the absolute key, you set up an automatic monthly investment of $500. And then the final and honestly the most important step of all, you walk away. Seriously, you just forget the account exists and let the system do its thing in the background for you.
But you really do have to start now. This is not something you can just put on the back burner. Because of how compounding works, every single day you wait, the mountain you have to climb just gets steeper and steeper. If you wait just 10 years to get started, you have to more than double your monthly investment just to try and catch up to where you would have been.
Look, at the end of the day, you're facing a choice between 2 very different futures. In one future, you're financially free, you're secure, you're in total control of your life. In the other, you're worried, you're dependent, and you're one unexpected expense away from a complete disaster. The only thing separating those 2 paths is the choice you make in the next 30 minutes.
The system is built to work. The history is crystal clear. The only variable in this whole equation is you.